Inflation, the gift that keeps on giving. Joining me is Dr. Brian Jacobsen, Chief Economist for Annex Wealth Management. Thank you for being here.
Thanks for having me.
You recently created a guide, Safeguarding Against Inflation. Inflation is a big topic right now. A lot of people, mostly consumers, will suggest inflation is too high. True or false? What sort of context can you give me here?
Inflation itself is actually a continuing increase in the price level. When most people go to the grocery store, they're going to see that prices are high relative to a year ago, 3 years ago, right? There's a difference between a change in the price level where they are and whether or not they keep going up. So inflation...
And how fast.
And how fast, exactly. So it's that continuous increase in prices that's inflation, and that was very high. Back in June 2022, the year-on-year change in the price level, so inflation, was over 9%. Now, thankfully, that has come down to something closer to about 3.5%. A lot of people would say that's still too high, especially the Federal Reserve, the U.S.'s central bank, is targeting 2% inflation. But if you think back to, I don't know, the 1990s, 1980s, it was kind of assumed inflation was going to average about 3%. So it all depends on your frame of reference.
All right, so if I borrowed at, say, 4%, and interest rates have gone up to 9%, if I am somebody who has a mortgage, I'm probably not upset about this situation. But if I haven't gotten the house yet, what are some of those factors that people, kind of where there's an argument on either side of it that people don't always necessarily think of?
True. Now, in terms of the mortgage example, I think that's fantastic because a lot of people during the 2020 to 2022 period when rates were really low, they locked in very low interest rates.
Yeah.
Now that interest rates have moved up, they look, hey, I'm in 4%. Why would I want to move and have to refinance or get a new loan at something closer to 7%? So it is having this effect of kind of locking people into their homes. Now, if you are thinking about an investor, you bought a bond at, say, 4%. Suddenly inflation goes up to 7%. Well, the value of that bond, especially in real purchasing power terms, has really declined. And that's one of the problems with inflation, is it creates a wealth transfer between borrowers and lenders. If you have a surprise increase in inflation, it transfers money from savers to borrowers. If there's a sudden decline in inflation, then it's actually a wealth transfer from borrowers to savers.
Okay, so are there any time-tested ways to beat inflation?
One of the best ways to beat inflation, just based on the historical record, are through equities. If you think about if you're investing in a business, they have an ability to adapt to whatever the prevailing economic environment is. They can adjust their operating costs, they can adjust their prices, and so just over time, stocks have actually beaten inflation, but it's not a silver bullet. It doesn't do it like day after day or even year after year. There are plenty of times where inflation has been high and stocks have sold off. There's also been times when inflation has been low and stocks have sold off. So it's risky, but if you can spend time in the market, it does seem like equities are probably one of the better ways to help protect the purchasing power of your investments.
All right, Brian, I feel like I would have no credibility if I didn't at least ask you about gold. Because I have been on YouTube, and from what I understand, that's something that I should at least ask you about. So what's your opinion on gold as it pertains to all this inflation stuff?
So gold has been on a tear lately. And a lot of people would look at it as, it's a great hedge against inflation. The historical record is a lot spottier. It's a lot more complicated. I think the first thing to ask yourself is, why do you want to own it? Do you want to own physical gold? It's like the coins, the bullion, things like that. You have to take into consideration, who are you going to buy it from?
That's what I've always wondered, like, what am I going to do with it if I have
it? Some people, they will put it in a safe deposit box. Maybe they'll put it in a drawer. There are all sorts of risks associated with owning physical gold. There are what are called storage costs. Okay. Some of that storage cost is you could lose it. It could get stolen. So more and more people have been actually buying like exchange-traded funds that represent an ownership interest in gold. But some of the people I talk to, they buy gold because they're afraid that the government is going to be taking their assets, and so maybe an ETF isn't the best way to go to kind of scratch that itch. But based on the history of gold prices relative to inflation, gold actually lost purchasing power from about 1980 until around 2006. It was
Okay.
just kind of like you own gold, the price went up, but it wasn't as much as inflation. So it wasn't the best hedge against inflation. Lately, it's been really good. So it does depend on the context.
All right, so we talked a little bit about mortgages, but what about related subject, different real estate
Yeah.
as a hedge for inflation? And then just out of curiosity, commercial real estate versus other types, because the answer might vary there as well, right?
It does,
Okay.
yes, exactly. And oftentimes people view real estate as a great investment to protect yourself against inflation. And it can work. You know, if you kind of think about if you have a property that you own and if you can increase your rents according to inflation or maybe a little bit more, sure, that can help. But what happens to your expenses? Those also go up, sometimes more than overall inflation. Plus, did you use borrowed money? Do you have to refinance it? So real estate has a bit of a spotty record as well in terms of protecting against inflation. Commercial real estate versus multifamily housing versus data warehouses. You know, when people talk about real estate, what are you actually talking about? Is it a specific, part of it? Is it land? Is it farmland? All of it. I mean, there's a huge array of different types of investments, but sadly, each one, it's not going to guarantee you any sort of outcome.
Well, the great thing I love about the guide that you put together is that it addresses each of these things, then kind of gives you a springboard for asking some more questions, which is kind of where this comes from here. So all of these things really relate back to financial planning. What is your overall strategy? So what are some ideas, regardless of where people are on the income scale, from average American up to people who have some more complicated financial lives? What are some ideas that you have for us?
Sure. So some of the things that we go into are about specific strategies that you can do in terms of what you can control. And let's focus on, say, spending.
We should always start there. Focus on what you can control.
Absolutely.
And your spending is a good place to start.
That's right, because it's so easy to get worked up about things that are outside of your control. And so if you first focus on what you can control, like your asset allocation, right? What's going on there? Is your portfolio aligned with your risk tolerance, your risk capacity, your long-term goals? But then also, what can you do in terms of your spending behavior? Can you do some couponing? Maybe some comparison shopping, right? Those are all things that you can do to really affect your personal experience with inflation. Because when the government publishes the statistics, it's for the average consumer. Nobody is average. And
Right,
so you
yeah.
can actually have a better and sometimes worse inflation experience depending upon those choices that you make. And it's not just about the spending, it can also be about the income choices. There's all sorts of things that you can do in terms of tax strategy, maybe Social Security claiming strategies, and that's all stuff that we go into in the guide.
Okay, so people have referred to inflation as kind of like a hidden tax. What about the more explicit taxes? You mentioned that briefly. There are some strategies that people can think about as they're structuring their overall financial plan, right?
Correct. Yes, you can look at what are you putting into your tax deferred or tax advantaged
So
accounts.
Roth versus pre-tax, super
Absolutely.
basic level
Yeah,
and beyond.
super basic, like the 401k stuff, which you are a pro at. You know all the differences there. There can be a huge difference if you are growing and investing through a brokerage account where it's taxable versus if it's in a Roth or if it's in an HSA or a traditional IRA.
Right.
They all have different tax implications, and really it's about paying what you need to, not paying any more. You don't need to give the government a tip through bad planning on your part.
And you lay the foundation for all this stuff in the guide. People can download the guide at annexwealth.com/inflation. A lot of good tips in there, but it is going to help kind of further this conversation. It's a launching point. It's not like we're giving away all the answers here, because like you said, no one is average. The answer is going to vary depending on who you are.
That's right. We tried to provide enough detail in there to get people started. But if you actually want to get started with a deeper conversation, you can go to annexwealth.com and click on the Get Started button. So, Tom, thanks for having me.
Thank you, Dr. Jacobsen, for being with me today. Don't forget, everyone, annexwealth.com/inflation. Thanks for joining us.